Hey everyone, welcome to this Friday episode of Crypto with Chris. I know it's a little bit earlier today than I normally do it, but I'm going to be away from my computer later this afternoon. I had some scheduling conflicts, but I did want to get out a quick charts breakdown for this Friday, going into the weekend, and cover a couple other cool things that I've kind of stumbled across throughout the week. So before we get into that, though, I wanted to again first remind everybody to follow my Twitch channel so that you can get alerts and also so you can comment in the chat. You do have to follow the channel in order to comment. And then lastly, follow my Telegram channel for alerts on all my upcoming shows. The links to that are in my Twitch profile and also in the description of all my videos. So with that, let's get started. Okay. So today is funny. Today's probably going to be basically a repeat of Monday, since literally nothing has really changed. I mean, yeah, we had a bit of a peak, throughout the week that I'll get into, but ultimately we're right back where we were, which is sort of what I expected. Although um, supposedly there is potentially going to be well, one of the ETFs that was applied for, the ARK ETF, was applied for 45 days ago, and the approval deadline is coming up over the weekend. And so there's a lot of rumor that they're actually going to make an announcement today because it's the last business day before the deadline. Probably it's going to get denied. I'm guessing. I'll be shocked if it gets approved. But we'll see. It'll not denied, but delayed rather. It'll probably get kicked back to after the first deadline coming up. We can see here this other deadline for all the other 8 or 9 or 10 plus ETF applications that were applied for, right around 45 days ago from the beginning of September. So that's going to be when like BlackRock and all those other places come on. So ARK, they were in a little bit early. They may or may not get approved. I doubt they will. I'll be shocked, like I said. But it could make for some price volatility today. We'll see. Who knows? But let's look at Bitcoin here. So yeah, like I said, we had a big wake up, which I'll get to on the daily here in a second, but I just wanted to kind of talk about it on the weekly here first. Bollinger Bands are still as tight as they've ever been in Bitcoin's history on the weekly level. Um, let's look at these two moving averages here. So we got the 10 and the 20. Like I've said on Monday, they actually are starting to diverge further apart. It's really hard to tell when they're this close together, and you can't really get a sense of, are they in parallel? Are they moving apart? Are they moving together? So that's why I like this. I like to have this indicator down here that just sort of identifies that. And so if we look at this closer, we can see that they actually are now for 2 weeks in a row have set higher highs in terms of the moving averages diverging further apart. So that's okay. That still signals an uptrend. It's still basically hovering around the same level of support. Um, Again, boring. I know it's more just like I keep saying, hammering more and more. It's got everything to do with these ETFs, and pretty much nothing is happening. We look at liquidity, central bank liquidity on the weekly level. It's still kind of trending down. The daily does tell a little bit of a different story, which we'll get to in a second. But overall, it's liquidity's down, everything is sideways, and economic signals are mixed. So I don't think we're going to see much here. I don't necessarily feel like the bottom's going to fall out, though. If we do look at it on a cyclical level, which I'll get into in a second too, we could see there's a potential for a dip. But let's touch on the daily here first. So on the daily, liquidity did actually pop up a little bit throughout the course of the week, and then has since leveled off too. And we did have this pump here. And I remember when this happened, I was thinking, well, this is all well and good. This is great, but like honestly, this doesn't mean anything. Because I mean, if you look at, so here's kind of the resistance level from this sort of channel that it's been in, and really all it did was just come back up to resistance. It didn't set a new high, it didn't break out, it didn't change the structure at all. It's still a downtrend on the daily. And also we've seen several times throughout this stretch here, it have a big pump day and then immediately reverse it the next day. Big pump, reverse, big pump, reverse, way back down, pump, reverse, pump, kind of reverse. So like I was expecting this more or less. And I thought really this was more just kind of a mean reversion. This wasn't really any kind of fundamental change in market activity or market structure or sentiment or anything like that. And so we had a big nice pump. It did kind of come up again the day after. I kind of had a little bit of hope because we had a number of bullish divergence indicators here that were kind of showing some strong signals, and so I thought maybe this could be. Um, but ultimately, I needed to see it, basically kind of close the day way above this level here, and really probably up around the middle, up in here, like above these levels here, and it didn't really even get any close to that. It didn't even wick up to it, and now we've got a bearish divergence indicator too. So right now it's back at support on the center of the Bollinger Bands in the middle on the 20-day moving average. Like I said, we could see some volatility based on if we get some kind of announcement about the ARK ETF. Who knows? But just going into the weekend, I think we're going to see more flat sideways activity. I did want to touch on the cycle here for a second. Okay, I believe we're at day 57. Yeah, 57. So 57 out of 60. Um, so at this point, it's like sometimes you get in a cycle, it doesn't actually have like a significant move. Like it doesn't run down into a cycle low. It doesn't always do that. There's been other instances, like here, for example, it didn't really run into a cycle low. It was just kind of flat sideways. Um, and so when it does that, you sort of have to just operate on time. Um, and looking at that, I would say I would move the cycle low potentially to this day here. Which would be day 53. But even that's premature. I mean, really, we're going to have to kind of wait and see how this resolves. If it does kind of pump up from here, though, without setting a new lower low, then day 53 would probably be the cycle low. And then we'll just kind of operate on that. Again, it doesn't matter. It has no bearing on anything. It's just for sort of historical tracking purposes. But that's kind of what I'm looking at here. So super boring cycle outside of the very beginning. We had the big pump out of there. But that's really kind of what I'm looking for is a move like that, a significant move where it's very clear and very obvious that we're in a new sort of structure. And we're definitely not yet. We're just kind of we're playing the waiting game. Um, so yeah, so that's what that looks like. One thing I did kind of want to touch on though is again, when we have this sort of boring sideways price action, I like to look at some other factors outside of just kind of charts to get a sense of um, which way the winds are blowing. And so I like to look at kind of what the derivatives market's doing to kind of just get a sense of the derivatives market's interesting because it can often dictate what is going to happen because usually a lot of people come in with a lot of money and you have to be well either really really smart or really stupid I think to play the derivatives market with a lot of leverage, but I will say that generally a lot of people who kind of have a good sense of what's going on, I like to think of it as like the Vegas odds, so to speak. And right now the Vegas odds are betting to the upside, and quite a bit. In fact, the funding rates, in fact, they peaked right here on August 7th. Not peaked, but sort of hit the highest point they've been at in over 6 months. So definitely a lot of quote betting to the upside still. And then if we look at open interest has been interesting too. Um, it's actually a steady climb. It did kind of peak up here again on August 8th, that coincided with that pump in price on Bitcoin. And then it did sort of level back off. But generally, overall, it's been trending in a steady upward direction. And open interest is actually as high, if we go back, it's as high as it's been um, since like, in a year. So definitely people are interested in what's going on in Bitcoin. Leverage is building in the market space. It's not like at peak mania levels like we've seen at other points in the past. Like if we go back to the previous bull run and look at it, it's nowhere near these highs that it was, in peak area. But I think it's recovered back all of what it lost from like the FTX crash, and all of those market participants just completely left. And it's slowly, 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 slowly crawled its way back up. And now it's right about back up where it was prior to all that. So, that's a good sign, I think. I think people are coming back into the space. I don't think this is an unhealthy amount of leverage in the space at the moment, and I think this is good to see. So, again, what I'm getting at here is it's pointing to the upside. At least we can say that the Vegas odds are bullish. So I'm not basing everything off of that, but that's something that I do factor in. And I do think that we do have upside. I mean, if we go back and look at TradingView here, the overall weekly trend is still to the upside, and that's all you can go on, and the weekly trend is healthy-ish. I mean, it's not technically broken its structure yet, but it is going up, and that's you have to sort of abide by that until that structure breaks. So um, it's an uptrend until it's not, basically. Let's take a look at ETH real quick. I'm not going to touch on ETH much because it's boring. In fact, let's just look at ETH Bitcoin. I think that's really more relevant right now. Um, and really, I'm only concerned about what it's doing on the weekly level, and it's going sideways. So ETH and Bitcoin are more or less kind of in lockstep, I feel like, for the last month plus, which kind of makes sense too, because Bitcoin is leading the way and ETH is just kind of along for the ride. And that's how that's going to go. But I do have some. On the Wednesday episode, we talked about rotations a lot. Or actually, before I get into that, I wanted to circle back to optimism because I know I've been touching on that. I had talked about, I was expecting this chart to come up and basically get rejected off of this 20-week moving average against Bitcoin. And sure enough, it has. It had a really solid month of just solid uptrend. Um, but I was like, don't get too excited about this. Really, all we're doing is coming back to where we were at the yearly open against Bitcoin. And I wouldn't have been at all surprised to see it rejected. And sure enough, it was. And now it's back below its yearly open against Bitcoin. So I'll come back around to this because this is going to kind of be a part of what I'm going to talk about here with rotations. But on my Wednesday episode with Quaka, we kind of ended the show, and I was really focused on this time range in here between the Bitcoin halving and the first Bitcoin peak. And I wanted to dig into this because I feel like there was a lot of volatility, and there was stuff that you could glean from this. And so I made this other chart that's similar. It's basically the same thing. It doesn't have all these lines, but what I wanted to touch on is this bit when Bitcoin did its 3x. So the halving was kind of a little bit before this. Um, and we saw Bitcoin just rally hard, right? Starting, what was it? Like right at the beginning of October, it went for like 3 solid months till kind of the little, the first, second week of January. It did like almost a 3x in that time. It went from 10,000 to 30,000, and it blew past its previous all-time high. It barely even, I mean, we can see it's sort of hit it a little bit. This is sort of roughly the 20K level, but I think I remember at the time, it really just shot through it. In fact, this weekly candle right here, what was this open? The open was 19.1. Yeah, it blew right through it, and kind of didn't look back. And so when it does a 3x that quickly, I think, that's the kind of thing that we want to see, or that's the kind of thing that we're going to see people start to want to take profit with. And sure enough, it was. So if we look at peaked here, and then it immediately did like a 30%, retrace. And at the time, 30% is a lot. But we can see if it peaks here. If we look straight down, this was also the start of, let me get to the line here. This was also the start of basically a rotation. So if we look at these next two candles, Bitcoin is just dropping 30%. But in these same candles, ETH dominance just pumped out of there. And so this money is people taking profit out of Bitcoin and pretty much buying ETH with it, rotating out the risk curve, buying ETH, buying altcoins, like both ETH and then everything else too. So this others, as we touched on Wednesday, this others chart is basically every altcoin outside the top 10. So that in the top 10, that includes obviously Bitcoin, ETH, plus all the biggest stable coins like like Tether, like USDC, that kind of thing. So this is actually super relevant here because this is basically the alt rotation, and we can see ETH, it rotated into ETH, but then ETH peaked out, fairly quickly. It only lasted for about a month. Meanwhile, as ETH starts to roll over and correct, alts continued on this dominant tear. And this is when we were seeing the likes of say like Solana and Luna and some of those big projects really kind of take off and do their massive, mega runs that they did. And so I think this is a way you can identify when the rotations are happening. And I think it's important to realize that we haven't seen something quite like that yet. But it makes total sense. I mean, obviously, when something, Bitcoin sort of led the way, and in the stretch, alts just tanked. In the initial run up, alts were just, and I remember this as it was happening because I had a handful of alt holdings, and I was just like, God, this is terrible. Like we're just losing so much. The opportunity cost here is insane. We're just losing so much value against Bitcoin, and I was starting to worry if how long this was going to keep going, and I even sold some of my alt positions mistakenly in this time frame. Thankfully, I bought them right back, but I did sort of miss this bottom chunk here, and I kind of regretted doing that. Um, the point being there, if you're already in an alt position and you've got long-term conviction in it, don't don't let go. But look for a big move like this. Look for a move, where it's a solid, whatever, 3-month run or whatever it is, 2-month run, where you're doing multiples in that period, where it's not really looking back, it's not really slowing down. And then as soon as you see a bit of a peak or a bit of a lull or a bit of a retrace, like if we go back, let's look at this time frame, with some moving averages, we can see. Um, oops, too far back. So this is basically that same spot right here. And it did roll over. It's tricky to tell. It's tricky to tell on the weekly because honestly, if you were holding this, this would have looked like a really healthy uptrend. And even this 30% dip here didn't even come back to the 10-week moving average. Um, so it, it's really hard to tell. I wonder if the daily would have been a little more insightful, probably. Yeah, I mean, on the daily, it looked certainly much uglier because it was still really overextended on the daily. All this way up, um, it just was well above. It never closed below the 10-day moving average, and then finally it just nuked. So you could look at this on the daily. You get a first big close below the 10-day moving average. Um, that's after a run like this, that's when it's time to go. Okay, okay, where are we at? You need to take stock and look at the entire market, look at what alts are doing, look at what ETH is doing, and start paying attention to everything else. Because this sort of a scenario where you've got this, you had this big kind of initial run that went for, first we had like a 78-day daily cycle, which is kind of insane because a 78-day peak, because normally it peaks around day 40. Um, and so for it to run for 78 straight days before peaking really, and then do this quick thing, and then pretty much just run right back out of it into a new cycle, and then literally the trajectory was even more pronounced and even steeper in this next cycle. These are signature things you look at and go, okay, this is, especially for Bitcoin, especially for something as big as Bitcoin to move this much, this fast, in this kind of a fashion. This is when people take profits. This is when people go, okay, I've made a killing on this. Now it's time to kind of, venture out a little bit. Let's run out along the risk curve and sort of see what we can do with some of these profits now that we've made. And so this is a perfect signature thing you want to see. And so now if we go back to this other chart, here's that same thing. Here's where that happened. And then of course, yeah, ETH pumps and then ETH dips and then alts rally. Now, ETH did kind of rally back up as alts sort of leveled off. This is interesting here too, because this is sort of multiple rotations in this scenario. ETH pumped, alts were pumping too, but then ETH, leveled off. And I think after a month of solid ETH gains, a lot of that money then went into people were like, oh, hey, Solana and Luna did even better, in this stretch than say ETH did. So maybe it's time to go even further out the risk curve. And so that's what we saw here. And then as ETH, or I'm sorry, and then as alts kind of started to level off, alt dominance leveled off, ETH then did another big run back up, and then they kind of caught up with each other, and alts and ETH were fairly similar at that point. But I did want to point out, in terms of the peak, let's look at the peak here. So the November 21 peak, this is when Bitcoin peaked, but alts weren't done yet, and this is generally what you see. Bitcoin is gonna run first, but Bitcoin is gonna peak first also, and that's what we see here. Bitcoin peaked. If we look further down, just straight down, look at ETH. ETH had a little bit ways to go still before it peaked, and then if we come down here, alts even further still. So Bitcoin peaked on the beginning of November 21. ETH peaked at the end of November 21. Alts didn't peak until um, really into January, which is kind of surprising. And so this was really confusing because people were still making money on alts in this phase. Meanwhile, the cycle was more or less over. The bear market had begun. I mean, by this point, if you look at January of 22, when alts peaked, Bitcoin had already spent, more than a month just down, losing it. And so if you were paying attention, this would have been like kind of when you would have gotten out, I guess, in terms of, I would have been looking for this first big close below the 20-week moving average, which sort of coincided with ETH peaking. But if you were riding the alt train, you were still moving up. And so you were still sort of under the impression that the market was fine, and that things were going. But this was sort of the last gasp of the bull market here. And so it's really important to kind of pay attention to these sort of phenomena you see where, we'll get a peak on one, second, we'll get a peak on another a few weeks later, and then third, we'll get a peak on another. Um, if you're lucky enough to sort of be holding alts in this phase and still having them continue to go up, and be in the right alts in that period, you're doing well. But you need to be paying attention to what sort of Big Daddy Bitcoin is doing, and ETH too. And so if you can see them going down and sort of losing their structure and having major closes below, major moving average levels, and knowing that, we're at sort of the end of the 4-year cycle from a timing standpoint, this is your exit right here. This is when you get out. And these are the things you look for: peak, 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 right in a row. And then, of course, everything just falls off the table after that. So um, rotations, it's big. And these are the kind of things, looking back, that I wish I would have sort of been more in tune with and paying closer attention to. But lessons learned, and this is what I'm going to be following now as we move forward into this next cycle. And if we look at it right now today, where we are, um, we haven't really had anything like this, of course. I mean, obviously, it would be all over in the news if we were doing this. But right now, Bitcoin has just kind of done this steady, boring, kind of what I would consider to be healthy uptrend. It looks a lot more like, what we saw, coming out of not this previous cycle where we just kind of blew up, blasted off, whatever, like a rocket, but the cycle before that, where it was just very slow and steady, some gains, some pumps, and then it would kind of level off, and then it would go sideways for months at a time, and then we kind of do something, and then it would sort of go sideways for another more months at a time, and it would just kind of do that. It would sort of level up sideways, um, and then till finally after the halving, then we sort of get this sort of parabolic run up. Not that the halving causes that, but I'm just saying, in coincidence, whatever, or not coincidence, but like, yeah, never mind. So my point being, we have a healthy, pump sideways, a little bit of a pump back to kind of where we were. We've got the significant 30,000 resistance level. Um, I don't know. This could be any number of things. I mean, yes, it's significant because, it was significant even going back further back in the previous cycle. We came down, we settled on it here. We came down, we settled on it here. We did sort of settle on it here. after the Luna crash. And, I think maybe people were thinking this might have been a good time to buy after the Luna crash and things had settled down because we had sort of established this as support multiple times in this cycle. And so you probably had some people buying here, and then suddenly, 3AC came along and imploded, and the market nuked, and those people have been upside down now for, you know, oh, well, it's how long? um, whatever, a year almost, 315 days. And so I think we're going to see some selling pressure here because these people are finally kind of getting their money back. And at the same time, we're going to see, whales and people accumulating here because there's definitely a bid here. Otherwise, it would just be kind of tanking down after all the selling pressure from people sort of, getting out of their bad trade that maybe they did. And that's just one theory. I'm sure there was some of that, but who knows? Um, and so, yeah, I think we're just going to see more sideways action. Let's go back to this chart here. What I'm looking at though, this here isn't enough to be a rotation yet, is kind of what I'm saying. And so I do want to point out though that um, let's go back to the previous cycle and look at dominance real quick. So this is Bitcoin doing that big burst out of the previous cycle low, and right about well, it's funny. So if we look at ETH dominance continued to go down, but this was really the start of the alt dominance sort of uptrend. Yes, we had this massive correction here where it almost went back down to the beginning, but this was definitely the start of the uptrend. And if we ignore this dip, I mean, let's look at this. It was, from here to here, that's just a solid uptrend. And if you'd have held this the whole way, you'd have done really well. So, and if you look at what time, this was August 19th of that cycle, and what's today? Today's August 11th. So I'm not saying go and, load up on a bunch of alts, but also, you know, I think that there's something to pay attention to here. And so if we kind of move forward, could this be the same thing? We don't know yet. It's too early to tell. Obviously, like back here, you wouldn't have really known that. And particularly ETH isn't doing anything like this right now. ETH is just sort of sitting here sideways. And of course, the narrative was way, way different back then. Everything was different back then. Even back here, crypto was still sort of finding its way. Nobody really knew. This was before DeFi. This was before, everybody was still sort of trying to figure out which legacy alts to load up on to ride to this next peak. And most of those legacy alts did nothing. And so, this was before, I mean, smart contracts were really just kind of starting to become a thing. DeFi was starting to, get sort of built out, but it wasn't really until further along in here, March, April, May, DeFi summer kicked on, and then peaked, right around here, that 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 was a thing. And so it's hard to go, oh, well, buy now because, this is the time when alt dominance is going to start taking off. Because, again, the narrative was totally different. We didn't know what was going on back then. We didn't know what people were still trying to figure out what the use case for Bitcoin was, or if Bitcoin was going to be like a remittance, system or whatever. And so it's hard to say because, fast forward to right now, we've got completely different narratives. We've got the ETFs, we've got the bank failure crisis, we've got all the stuff that's kind of driving Bitcoin right now. And suddenly Bitcoin has a purpose again. And ETH does too, and certainly alts do too, but they're not what's dominant right now. They're not what's driving the narrative right now, kind of like it was back in this other period back here. So, and also it's a very small sample size. You can't go, oh, well, it did it here, so that means it's time to buy alts now. I mean, I'm not saying it couldn't, but that, with a sample size of one in this scenario, I think that would be kind of a foolish exercise. And so, yes, pay attention to this. Look at this. Notice that it has sort of done a bit of an uptick, but also notice that ETH is very flat and Bitcoin is the one that's really in the uptrend right now, the overall uptrend since the beginning of the year. And also we've got the ETF deadlines coming up, in a well, less than a month from now. So I'm not ready to jump into alts yet. I've got a few on my list, but I'm gonna wait it out. I'm sure some people will get lucky that have bought in and picked the right alts, and maybe we do see some kind of a trend like this play out, and good for them. Um, it's such a gamble though, you know. It's such a gamble to pick the ones. And remember too, yes, if you picked ones that you bought back in here that did well, and honestly, I did pick one. I picked one that did well throughout this whole range that I was accumulating back in this phase, and it was quant. I was buying quant at like $6 and $8, and it peaked out somewhere around 400. I didn't buy it at the peak, but or sell it at the peak, but that was a good buy, and that was something that I got lucky with. But like, keep in mind all of the stuff that really did the best, like the Solanas and the Lunas, and I can't remember anymore, but I know there was probably a bunch of them. The ones that went up thousands or tens of thousands of percent, those didn't kick off until all the way at the beginning of 2021. So most of the stuff that you might be buying here, yeah, you could do well, but also the stuff that might do the best overall in this cycle might not even exist yet, or might be worth pennies and is not on anyone's radar, and they're busy building and no one's ever heard of them. And so just kind of keep all that in mind. It's still early, basically, is what I'm saying. I mean, yes, we had this sort of general trend up, but Bitcoin didn't really do its thing here until much later in this cycle, and that's what caused the big rotation. Um, that's what caused people to spread out the risk curve, and that's what drove all this and drove all this. So, and that wasn't until after the halving. That wasn't until what, like a year from now. So we've got a whole other year basically. Well, if we follow the previous cycle. So yeah, those are my thoughts on some rotations. I think that's probably all I've got for today. I hope that was helpful. I hope that was informative. I'm still kind of this is basically just a big thought exercise for me too, just trying to figure out what to look for, when to get in, when to get out, when to rotate. And I'm really trying to kind of have this perspective with all these different dominance charts, and follow these, because I think that there's some insight here, and clearly I've identified it both in terms of the rotation out the risk curve, and then also towards the end of the cycle, how that played out too. I think there's a lot to go on in this period right here, and in this period right here. So I think these are important charts to reference throughout the cycle, and I'm going to be doing that, and I'm going to be talking about that as we go along. So yeah. Um, if you watched, probably nobody's watching because it's way earlier than my normal runtime. So if you watch this on the replay, I hope this is helpful for you. And yeah, thanks for watching. All right, everybody, have a good weekend.